Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, January 8th, 2008. Well, as I sit here to do this video, it's around 2:40 p.m. Eastern Time, and I want to take a little bit of a look at the intraday charts and kind of go over what we've seen over the past day. How did we necessarily know that the market was going to pull back as we had predicted on the Research Center videos, and how were we able to take advantage of that? Also, what are the charts now saying going into the later portions of this day, and maybe where could we be going tomorrow? And first of all, let's talk a little bit about what we're seeing here on the market. First of all, the Dow is lower by 85 points, the Nasdaq is flat on the day, and the S&P is down about 5 points. Really, a percent on the Dow, 0.5% on the S&P, and 0% loss on the Nasdaq. So it's interesting how one's 1%, one's half, and one's 0, kind of going down the chain there. But in any case, the more important things that I want to discuss today, folks, is the downside in the market. And I first want to look at the charts, because we had talked about this in the Research Center late last week and on Monday, and talked about the probabilities of pullback on Tuesday as well, how we saw major indicators pointing that the fact of the matter, the market should not have been up on Tuesday, and then we saw the big sell-off on Wednesday to confirm our analysis. And what you see today, folks, is that the market is lower, but it's really been a quiet market, and oftentimes that'll happen. When you have a big move one way or the other, oftentimes you need a consolidation day, at least one if not more. But in this case, I would say at least one, and what we're getting at today for the most part, at least at this point in the day. And the reason for that is this. Think about this, folks. Think about you just ran a marathon, all right? And you just ran a 20-mile marathon, 10-mile marathon, and you spent all your energy. Someone couldn't turn around and say, okay, go run another marathon 10, 20 miles. You're going to be like, oh, this is too much. I got to take a break. And that's what the market's like. You run a big marathon on a big percentage loser or winning day, and oftentimes you need a little pause day before the market can continue on that marathon one way or the other. So keep that in mind, folks, as we are seeing it. Now, there's a couple key levels I want to point out. I showed you some beautiful charting in yesterday's intraday video on this chart, and this is yesterday's SPY intraday 10-minute. This is today's intraday 10-minute, and you can see it's a much flatter. This was much more of a gap down and sell the whole day. This is much more of a little gap down, but then a little bit of a move up, move down, move up, move down. The key patterns today are this, right? First of all, you had a move down into 10 o'clock. What do we know about 10 o'clock? I've talked about this on multiple intraday videos. It's a 10 o'clock could be a key reversal time frame. It's not always, but oftentimes you will see if you move down into 10 o'clock or up into 10 o'clock, sometimes you can see a pullback the opposite direction. And sure enough, here's your 10 o'clock candle, and look at that. It happens to be the low for the day that we put in, all right? After that 10 o'clock, you get a little bit of an up move, then a down move, but ultimately an up move, basically taking us back to the gap fill. Now, gap fill is right in this range, and you can see the market or the futures went back, or the SPY went right back to gap fill, this level right in here. And sure enough, that's resistance. And those of you that are technical or starting to learn the technical side of the market, it's important to realize that, folks. That's the key level you want to realize. When you gap down, if you fill that gap, there's going to be resistance at that level. And sure enough, there was resistance right here, and look at it, happened to be a great shorting opportunity intraday. In addition, look at the little bit of a tail you get. You get a little bit of a topping tail on this. It's not a big one, but a little bit of a topping tail, which can also be a bearish signal. And sure enough, you get a nice little sell-off here, then a little bit of sideways action back up. And what pattern would this be off of this down move? It could be viewed as a bearish in spirit of bear flag, and you do get a little bit of a sell-off. But the one thing to remember here, and I've remembered this as I've been trading, is that you just don't have the same momentum. You don't have the same power in the move after such a big day yesterday, so it's not surprising to see the moves much more compact here. Sure enough, you get a little bit of a move later in the day. Where does it go? It goes directly to the 50 moving average, at which point you start to sell off and then rally right back to the 50. So we're hovering right on the intraday 50 moving average, and you can see that by the blue line here. And the blue line obviously is going to be quite a bit of resistance because you really didn't hit it all day yesterday. So you know the first hit here is going to be significant resistance. You got to pull back. And even the second hit here is good resistance, but it's not as good as it was before. And that's the other thing you want to realize and understand, is that the first hits are always the best. The second hit will be good. The third hit, not that great. And by the fourth hit, that's it. You know, you stay away. You really, I would only ever play the first hit. I mean, that's my policy. And sure enough, you got a little pullback off that first hit. Now, one thing you're seeing here, folks, is you are seeing a little bit of a breakup above it, although we'd have to see it close. And even if it closes above this 50, you know what? You got resistance right here, above it here. And look at that. We're going right to that resistance. We'll check back in at the end of this video as I go to the 60-minute, and we'll see if that comes into resistance and touches that and maybe pulls back as we do our analysis to kind of prove our point. Okay? Let's go to the 60-minute chart. What you can see on the 60 is we had that giant move up, and in the research center, I alerted all our subscribers to the fact that this pattern was way too extended. You were seeing multiple indicators, whether they were technical or our proprietary calculations, signaling that this could not hang out up here and it would probably come down. And I said, if it breaks this 20 moving average, first support would be right here. All right? And this is what I actually did in the actual video. And I said, if that breaks, then the second support would be right here. All right, so let's analyze. So, interestingly enough, we gapped lower yesterday right below that key resistance level. And again, I picked these levels out before the market even did its thing. It just happens to be that that's the way the charts are telling me it's going to go, and that is what happens. So, sure enough, you gapped lower here, and you came right into here. You didn't break above, so you started to sell. And once you couldn't get back above this resistance, it was support when you came down, but once you gapped below it here, it becomes resistance. Once you're below support, it's resistance to the upside. Sure enough, here you have a nice little move to the downside, and where does it go into the close? Right to our next support level. Now, look at this also, folks. You're getting a nice move up in the market, but initially on the 60-minute you sold lower, and now you're creating a little bit of what we would call an in-spirit of bear flag. Now, it hasn't broken down yet, and the one thing you want to do is draw this line back in. This 60-minute line is resistance now on the upside, and look what we're piercing right now. All right, on the upside. How great is that? It's perfect that the market's trading like this right now, because sure enough, you just extend your resistance line, because once we broke this, which was support, we ended on the support line yesterday, and that's how we knew, even when we pierced it, we talked about it probably would hold this level for the day yesterday in the research center, and sure enough, it broke today, but you traded back up, and look at the key level you're hitting. You hit it here, here, on this candle, and these are 60-minute candles, or 1 hour, and then you're hitting it again here. So you're continuing to bounce off of that level, and it's showing you that it's that resistance point. So that's important to know as well, folks. Very, very key. Now, the question would be is, well, you have two situations going on here. Number one is you're pounding on a resistance level, this being a resistance line, and it's the third time we've hit it on the 60-minute. So there's one avenue there. The other avenue would be, well, you're making an in-spirit of bear flag here. So this could go two ways. You could finally close above this level, but if you do, you have the 50 moving average on the 60-minute to play with right here, which will be the next resistance point. And if you don't close and you come down and you break this, well, then you're setting up for a nice little fall, possibly down to this next support line. All right, right in this range down here would be the next level to go. And again, then you're talking about multiple calculations and so forth. But in any case, just continue to watch this into the close, and you can look at, see where this mark goes. Does it close above here? If it closes above, you need to see confirmation, and then you also need to realize you have the 50 moving average here and a downsloping 20. So there's going to be a lot of resistance on the upside that's going to come into play over the next day or so here on the upside, but doesn't mean, you know, it could do it. It could do it. I generally think it won't do it, but it could. And then on the downside, if you break this to the downside, well, then you're going to fall decently. First support would be down here, obviously, which would be the lows of today. And then if you break that, then you're probably going to this level, around this level down here. Okay, so that's just a little intraday analysis. I hope you guys are getting a lot out of this. We're all about educating, and you can go join the Research Center to be fully educated and really get the hardcore stuff just by going to our website, inthemoneystocks.com, and joining the Research Center. It's a fantastic service, as it has about 5 different things: videos, research, you name it, it's up there, and even a few picks in there. I do the Hidden Gems picks, and our last Hidden Gems, 2 days, they went up something like 50%. It was pretty ridiculous. But in any case, that's not an always occurrence, but it just sometimes happens. All right, folks, enough from me today. Hang in there. The market right now, let's do a quick market check here. And you can see crude oil trading down slightly on the day. Gold, I believe, is up on the day. And let's not forget about the markets, which have bounced back a little bit here. And we are trading on the markets down. Let's see here and get a quote. Let's get a quote here. Down at 55 points on the Dow, up 7 to 8 points on the NASDAQ, and S&P is down 1. And one thing I just want to point out, guys, look at the resistance line. Yes, it was above it. Now it's pulling back, and that's just telling you that level is key. As a trader, you got to know that level. All right, it's all about knowing that level on the resistance levels and support levels. And notice this, guys. I just showed you guys this in the beginning of the level. I said maybe it goes here, and then you should pull back. Look at that wick now. You came up, hit it, and you're pulling back. Technicals work, guys. Come join us at inthemoneystocks.com. We'd love to have you. Take care.